Hey, happy Friday. What a crazy morning it has been. In this episode, we're going to be talking about Ford and GM as a recap of the earnings. And I'm going to basically go through why Tesla will always be worth more using the financials of Ford and GM to explain it clearly. And I decided to make this video because I feel like every single time I make a video on Tesla, I then talk about the fact that anyone that suggests Tesla's valuation isn't correct on market cap because Tesla's market cap is so big probably has never bothered to read the financial statements meaningfully. They're just getting their data off a data feed. And so that I don't have to repeat myself ever again, and probably because I'm not the only person, you guys can just give them this video so that you can clearly see why it is that Tesla is always going to be worth more than Ford and GM and even the other auto manufacturers. And that really comes down to, which I will show clearly, the fact that all the other auto manufacturers essentially give up a bunch of their revenue, give up a bunch of their return off the distribution aspects of the business. And also, they just, they have a bank attached to them, and the bank has to do a bunch of dumb stuff, particularly right this minute. So let's go through that. Past performance is not indicative of future returns. And also, I absolutely do have a position in Tesla. I do not have a position in Ford or GM. I am going to go through the macro a bit because I do think that that gets very confused for a lot of people. So I'll go through the macro, I'll go through Ford, I'll go through GM, and then I'll compare and contrast across the financial statements so it's crystal clear as to why things are the way that I'm saying they are. Okay, so here is what one of the major components of the bears that I think they always get wrong, and that is this idea that that it's about which car is actually better. It's actually not about which car is actually better. It's not fuel based versus hybrid versus EV. It's actually the idea that in general, most of the countries that have the largest populations do not produce enough or refine enough energy such that they're going to have to move to EV whether they like it or not for their own internal security. And this is a map essentially of refining capacity across the world, where new capacity has been brought on versus where it's been taken off. The red dots indicate where refining capacity is gonzo. The green dots indicate some sort of conversion, and the pink dots are partial closures. And as you can see, Europe is mostly closures with a little bit of conversion. The Middle East, Africa, and Asia are trying to build up refining capacity and so on and so forth. So if you want to continue with population growth on non-EV, then you're going to have to solve that problem. And I don't think it's going to get solved. Hence, the movement to electric vehicles isn't about who has nicer cars. It's really about the fact that this is a bigger problem because fossil fuel is still not a renewable resource. Now, let's move on to the next thing. Production versus consumption. There are very few countries that actually export anything, but they're all, lo and behold, in North America and South America, they're not the countries that most people are producing stock analysis out of. That's why everybody feels that way, and that's why you get the worst type of analysis associated with it. We, by the way, this is a 2016 map, but very little has changed. China continues to try to produce more, but we won't really let them produce more for various reasons. And as a result, they continue to grow as their economy grows, their usage of various energy stuffs. I won't go into massive detail about that. And then here is a demographic map via population density. You can see where the density is. And then going back to the last map, you can see that they're going to have to move to a different format of automobile. Okay. Hold on. Oh, yeah. This is part of the thing, too, with why we might actually care and want to have a certain type of distribution. We will probably in the United States remain hybrid fuel using. But because of this, we probably want to keep being able to be net exporters because it does give us, in the United States, a bit of geopolitical pull. Okay. Let's see. Ford. This is what happened with Ford on the quarter. Revenue down 1.2%, operating income down 21%. How did that happen? Well, it wasn't from cost of goods sold. It wasn't from fulfillment, which is just shipping the cars around. Yes, that was higher. Yes, fulfillment was an issue, but it's really from tech and content being up 35% because they have to go EV at this point. It's causing them too many problems. And one of the biggest places where this is a pull is if they want to compete internationally, which is why the previous slides are so important. They are going to have to do this transition whether they like it or not. Sales and marketing was up a bunch. General administrative is up a bunch because they've got to do all of these transformations. And finally, this is the most important part. They took a massive L, okay, on Rivian, and then the loss from Argo AI, which are the two areas that they can't even spend from. But I'm going to show you very, very directly why then that has implications for why Tesla should be valued significantly more. Okay, if you then give them back, which I sometimes do, and give them an adjusted number, adding back in the losses that they took, you have net income still down 33%. So I'm adding all that stuff back in. You get about $6 billion in net income. Without that, you still contrast that to the previous year and you're at down 33%. Okay, that's Ford. Now, one of the biggest things is Ford financing. I want to talk about this because it's really relevant to understand the gross margins. Now, I want you to see very clearly that the gross margins from year over year didn't shift on the core business, which is automotive. They are absolutely restructuring to split out the electronic vehicle business because guess what? That's going to be the most important area for the future. And it doesn't matter what everybody thinks. That's what's going to have to happen because of the nature of what's going on in other countries as relates to how they're going to manage energy distribution in the future. All right. So 10% financing, actually those gross margins collapsed from 52% to 27%. And this is what people do not understand when they talk about Tesla doesn't deserve its valuation. What they do not understand is that the financing arm compensates and tries to help with sales whenever there's an issue with interest rates. And we have been through a huge period of declining interest rates. So now GM and Ford Finance have to do their thing. And doing their thing is going to show up in operating and gross margins for the foreseeable future. Maybe we have a little bit of an improvement in the US, but I'm not thinking it's going to be quite the same thing. So the gross margins for Ford Finance went down to 27%, as you can see here off the income statement. Additionally, you can kind of see it here, which is even more problematic. You can see that it got squeezed both on retail financing and dealer financing. Okay. So Ford Finance bears it, and it is a $40 billion use of capital. That is cash money that cannot be used for R&D, which Tesla does not have at all, period. Okay. Now let's go on to other relationship here. It was really hard because the way these guys report their numbers, and you have to go through the 10K in order to really see this because it is 100% not going to show clearly on the quarterly releases. So the 10K for the annualized report for 2022 just came out, so you can see it there. But if you look very carefully at this, you will see this table really demonstrates the relationship between Ford Finance and auto sales, and you can kind of see what's going on with Ford Credit and what's going on. This is EBIT. This is operating income. And you can see that any improvement in automotive operating income just came out of Ford Credit. That's my beef. That's why I feel like people don't oftentimes have a clue what they're talking about. By the way, these special items, again, are them at Rivian plus peeling out of the businesses that they can no longer support because they actually have to focus on the core business, meaning they've taken themselves out of the running for any kind of self-driving. That is what it is. And also, they're really barely skating through trying to get the EV to a certain point. So technology-wise, they have to take an L mostly. Okay. Additionally, as we go through it, this is their new strategy, taking a loss on the EVE right now. Traditional Ford is actually making money, and then you've got the trucks business. But if they fail to do the electronic vehicles business, pretty soon, because of the way distribution is happening, because of where manufacturing is going across the board, it's just going to end up affecting the core business. It's just the way it is. Okay, now going to GM. GM posted a decent quarter, but it has the same issues. And if you look at GM's business model, it becomes even clearer why you cannot use this crazy argument that Tesla should be worth less. And even because here's the thing, Ford, terrible quarter, very inconsistent. Okay, GM, great quarter, but now we can really see what it looks like to have a great quarter and then compare it to Tesla, right? So here's what it is. Growth of 28%, awesome. Operating income up 33%, net income up 14.8%. Decent quarter. This comes straight out. EBIT adjusted is really just operating income adjusted for a bunch of stuff. Now let's talk about that bunch of stuff, okay? GM financing. Now, I hate this because they literally make this as small as possible. I'm trying to figure out if I can share this for a second. Let me try to make this a lot bigger. Stop sharing. View. I'm going to amp up the view size here. Zoom to zoom in. All right. Let me try to show this as clear as I can. Geez. Okay, let me zoom out again. All right, I'm going to talk through the numbers because unfortunately, I'm using something that isn't allowing me to show this very clearly. But here, oh, maybe I can do it this way. Okay, yeah. So if you look here, you can kind of see GM financing is about so, you had 9.5% lower revenue year over year. Okay. Or this is sales and revenue. And then you had higher costs. So the gross margins, in case it was unclear, of GM financing, it ate 7% of those gross margins to allow for GM to look better on the sales line. Okay. Now, given that we don't have a loan loss issue in the current environment, it's probably not a bad call to make your financing arm eat it so that you can actually have better sales, which is 100% what happened and is the right call. However, and this is kind of important, you also should note that all of the losses, what is this cruise that is doing a EBIT loss of $3.1 billion? Well, Cruise is basically R&D. That's where they're jamming all of their EV research and development. So when people try to compare these companies, I'm just like, you have no idea what you're talking about for this reason, because you have to actually adjust the EBIT from the automotive piece. Oh, shoot, I haven't been sharing my screen. Let me share the screen. Sorry. Okay, so here, let me show you very clearly. This again is Cruise. This is in the above. You can see that basically the gross margins for GM are lower this year on the financing arm versus last year. So 100% they use GM finance to help their numbers. Okay, and then here is what it looks like when you actually put back in what the components are. So GM's gross margins without Cruise are only 6.7%. GM's gross margins with Cruise are 4.5%. Okay, that's just sales minus what it costs on operating. That's operating margins, not gross margins, I now realize. So operating margins, that's what it is. Okay, 6.7%, 4.5%. And the gross margins of Ford are 10%. The operating margins, since they took an L, you can't even do that number this quarter as far as that goes. So that's no good. And so GM Auto without Cruise, in other words, GM Auto, if we just don't include any R&D expense, is 72%. But if we actually do what you're supposed to do, which is put the R&D expense in with everything, it's 64% of revenue, because GM financing is really producing 36, 1/3 of the revenue comes from GM financing. Okay, how does that compare with Tesla? Why do I always get irritated? Oh, sorry. A couple more things just so you can see it cleanly. You can see this on the balance sheet. And if you look at down here in liabilities, it's about $100 billion in cash usage for GM financing. That is another big component of why people that say that silliness about, Tesla's market value doesn't even make sense given how many, they just don't understand. They've clearly never looked at the statements. Okay. So GM has to keep about $100 billion just for the financing arm. That's on the balance sheet. And I encourage you guys to have a look at that and make your own decision on it. Okay, let's look at Tesla's balance sheet. Look, Mom, no debt. That's what I had to say there. And they don't have debt because they basically don't do that. If you want a loan on your Tesla, That's basically something they've managed with mostly Bank of America, but other smaller lenders as well. Okay. So they don't have a $1 billion cash usage that just comes from the financing arm. By the way, the $100 billion is cool right now because basically the US consumer has been financially stable. During periods in the past, you've seen massive credit losses off of that. Additionally, we've been very lucky because although used car prices have declined, new car prices have not thus far shown massive swings in asset value. So big differences. All right, couple other things about Tesla I'm just going to show you. Here are the gross margins for Tesla, okay? Gross margins for Tesla are 29%. Operating margins are 16%. However, unlike GM and Ford, they don't try to do something where they off balance sheet the R&D. R&D is right there front and center. And this is, I'm actually being kind of mean by using this gross margin number because quite frankly, some of the newer objectives like energy generation and storage are still improving their gross margin and operating margins. So realize that these numbers totally ignore the fact that there's other stuff that they're doing. Okay. The other thing that drives me absolutely bonkers when people compare it is they like to try to pretend like, oh, they sell so many more cars, Ford and GM. Well, you know what? That just shows me you've like literally never bothered to look at these financial statements for Ford and GM because let's talk about operating income, okay? Operating income for Tesla is 13.6 billion. For GM, it was 9.9 billion, and Ford took an L. Okay, so like you can't even compare it there. It's the most ridiculous statement. So realizing that GM may sell a whole lot more cars, Tesla makes more money selling less cars. It's therefore ridiculous to be concerned or confused as to why Tesla has the bigger market cap. And Ford just demonstrates that part of the reason why you always are going to have to discount all the other auto companies, because quite frankly, every other auto company looks approximately like Ford and GM, is because given the transitions they're taking, they still are going to occasionally take an L. Tesla is at best going to have quarters that are tough, but it's not going to take an L, okay? So that's really what's going on there. Let me see if I've got other things I want to mention. Oh, yeah. Lithium of America, some people have asked me about. I feel compelled to say it. Part of the thing that makes Tesla so amazing, if we do just last year, is because they managed to do the numbers that they did, beat estimates literally all 4 quarters, despite a tough supply chain. And lithium is the major component of the problem. And a lot of folks are like, but Ford has solved that by investing in Lithium of America. Okay, here is the financial statements of Lithium of America. You see how there's no revenue? There's no revenue because essentially they don't actually sell lithium at this point. They have lithium in a couple of different mines. Whatever reason, they're quoting themselves as the largest producer of lithium or largest lithium miner. I don't know what it is they're trying to say, but they most certainly are not the largest producer of lithium that then gets sold in any way, shape, or form because they don't sell lithium. They don't. They can't sell it until they get past all the licensing. So this is the only part for the US that I saw in their documentation from September. The timing for completion of a feasibility study is now scheduled for Q1 2023 in order to reflect ongoing feedback from strategic partnership, financing, yada, yada. Here's the thing. I don't want you to go too quick on making sure that your facilities for lithium work because lithium is hella explosive, okay? I would really prefer that all these factories and operations are done very nicely and gently because I do not want a massive lithium explosion in California. I mean, the only actual company in the US that produces and sells lithium is Albemarle, ticker ALB. I do have a position on that as well, so that is what it is. But and I'll disclose that. But so Lithium of America, I don't have an opinion on whether or not you should go long and short because quite frankly, this thing does not trade on normal valuation. You would actually have to do that valuation work based on what you think the price of lithium is worth, which is knowable in the current time. And then any thought process on how long it's going to take them to get it out of the ground and correctly manage the pipeline of distribution, because that's not a given either because this stuff is actually explosive. Okay, so that's what you would have to do that work correctly. To me, this looks like a private equity investment that went public really early. And so you'd have to have that specific skill set, which is how do you value a private company that is actually gone public. And so I stay out of Lithium America. Occasionally I'll buy puts if it's gotten too crazy, because even I have some thoughts on that. But that is Lithium America right there. And then this is one of the other big constraints that exists that everyone should know about: mining, production of lithium produced in tons. Okay, these are your major places, but this is also a little bit oddly stated, because even it's really, even though this little baby note, which you maybe will say, Australia produces more than 50% of the world's lithium, and China accounts for over 90% of Australia's lithium exports. So that's something to note here. But as you can see, the US is way down in, like, we're so small in contrast, 0.9 or not, or it's basically, yeah, we barely make anything. So that's going to have to change over time in order to actually allow GM or Ford to ever do anything. By the way, the fact that Tesla somehow manages to get lithium is really because they have been all over shoring up supplies of this and pretty much every other raw material for a while, And it's brilliant for that reason. And that's all I've got prepared for now. Any questions? Let me see what's going on with the chat. Hey, Dave.
Hey, May, I have a question. Your the financing arm of Ford and GM, you're saying that's not profitable, or it's just a huge use of capex?
It is profitable right this minute, because basically consumer credit has stayed up, and also you know, they run it the best they can, right? And as long as the consumer hangs in there, they won't have credit losses, so they can just push that out. Do you know, as far as that goes, it shows up really strangely on the balance sheet because you just see liabilities increase. And this is why the credit rating is so important for them. Like, they do definitely have to be more careful once the market comes in. And they have been known to take gigantic L's to the extent that consumer credit gets weak. That's definitely been the case 2008, et cetera. Like, you just name your favorite time that the subprime autos exploded, and GM took huge L's on those quarters as well. But it's really more that the financing arm attempts to, it's one of the ways that they try to make it affordable. And it's really important to understand that the wholesalers, which is basically the dealerships, which is a huge cash drag on GM and Ford, the wholesalers, when they can't get loans from the bank, will go to GM and Ford to try to help sell cars. That's part of the margin give up that is happening between dealership and manufacturer, that Tesla just doesn't have to deal with, because number one, they own their dealership, and number two, they don't finance the cars. It is what it is. You know what I mean? I mean, they actually mentioned on the call this last quarter that they do actually have enough cash if they needed to in certain specific markets finance, but they didn't have any thoughts to do that in any kind of meaningful way, like Ford and GM have made it like literally 30% of their net income.
Okay, so financing is bad, is what you're saying, for Ford and GM.
It's mostly right this minute. Financing is mostly, it's not the reason that things are problematic at Ford, for example, or for GM, but it is the issue. The issue for them is they can't use that money for R&D. The R&D money always has to come in the
there you go.
Yeah. So that's like,
okay.
So this year,
so that's your point. Okay.
Yeah. So it all either has to come from.
And how much are they using for financing?
Okay, so for Ford, I think it's about 40 billion. For GM, it looks like it's closer to 100 billion dollars that sits in liabilities. It's a lot.
Okay, and the return on that is what?
It's whatever
they're a bank, right? I mean,
they're a bank. Yeah, that's exactly what it is. They're
banks are very profitable.
Can be. I mean, as long as you have, but they're specifically an auto lender, right? So they're basically front. So you got to think about it. The way that they work is they fronted all the money to build the car, and then the financing arm helps them sell the car. And that's kind of is what it is. That's true, Sean.
No, this Cadillac hat, this is an iconic. This is iconic is the name of the Cadillac EV. And I drove one. They gave me a hat.
I don't know nothing talking
I
about
don't know.
cars, but I know how to read a balance. I knew how to read income statement, balance sheet, financial statement. So we'll work together as a team to try to get this a certain way.
Yeah, I
So
need a
funny.
Tesla cap.
You need a Tesla cap is what it is. But this is
Right.
why, like, I think that, look, go long Ford, go out long GM. I'm staying out of both the names. I have been known to go both long and short in different market environments. Ford, absolutely, in this call, it was very depressing to listen to it because he had to basically say, in order to enter the next phase, we're going to have to spend a bunch of money on EV because that's just how it is. As like that's the direction that all the legislation in Europe and Asia is going. So, GM hasn't really owned up to that fully, I'm going to say. It's really bizarre that that's the case, but the fact is both of them are really, really ham-fisted. They're really handcuffed. Sorry, they're handcuffed. Got the wrong word wrong. Relative to Tesla, who regularly spends on R&D and is already kind of in that market. That's why saying that the market cap of all the other auto manufacturers relative to Tesla is small. Tesla's the largest relative to all of them, even though it only makes this really ridiculously small market share of all cars globally, is the stupidest argument I've ever heard in my life. FYI, sorry. Just saying, I'll be extreme so I can cut it later.
Yeah, and these price cuts means, I mean, they just don't have enough margin to absorb it. Ford and
Oh,
GM,
you mean Ford and GM? Yeah, I
whereas
mean, look
Tesla
at it.
does.
Yeah, Tesla's got plenty of margin. I mean, most of it's operating like it's
Okay.
you know, yeah, like because remember Tesla right this minute is still like its gross margins are 29%. It's only selling 2 million cars this coming year, so it sold less than that last year approximately, I think, or right at that. The thing that's really important to note is that it hasn't really been able to get economy of scale, yet it's still super profitable. So we know that as some of the other factories come online and scale, it has certain benefits. That's part of the reason why it can do what it's doing. Additionally, remember that gross margin number is for autos plus everything else that I'm quoting. Yeah, that's the whole point, right? Like the gross margins on Ford are 10%. Operating margins are big L right this minute. It is what it is. Where are you
Yeah,
going?
I read where Tesla
Dubuque.
outsold Tesla outsold Toyota in Australia. That's big.
Yeah, yeah. All of them have massive production issues.
Not
None of
just
them have.
EVs, all cars, not just EVs, all cars.
Yeah. Yeah, because people would like to export their oil right now versus have it used a certain way. As a result, from a governmental perspective, it makes sense to promote EV and EV infrastructure because ultimately there's only one country that desperately uses oil and that you definitely want to continue to have a bargaining chip with, and that's China. China, even with all the shutdowns, probably still used about 14 billion barrels of oil. They only make 4 billion barrels of oil, and they got to sort it out some other way. Nuclear is the thing that they would love to do, but it's still only 5%. And wait, let me just show this. This is how it's thinking about. Let me just show this. I dragged this article just in case this came up. Um, okay, so this is our number. This is what we export to China. Okay. Mineral fuels was really one of the major exports. Electrical, electronic equipment. That's going to be semis going forward, by the way. Okay. So, and then here, they say it's the climate goals, but it's not the climate goals. Okay. Does China care about the climate? A little bit, yes. What they really care about is GDP, and energy is such a huge component of GDP growth. Like I was trying to find a graph that would show the relationship more directly. But if you'd like to grow your economy, you need to come up with a power source. China mostly lots of coal, as much as you want. It's an ugly form of fuel. Is it fuel? Is it very efficient on a cost basis? Yes, but it has all these secondary effects that the Chinese government then has to pay for, which is not fun for the Chinese government, so to speak. As a result, nuclear is really it. So here, wait, this was one little thing. You're right. I just want to acknowledge this as relates to Cybertruck. That is a big deal, and that is absolutely true. This is a good one too. What's your thought on auto subprime loans? I don't actually think they'll. I mean, I think we're a little bit far on that right this minute. Hold on, let me just put that back up on subprime autos. I think we're a little bit far on that. What will happen though that can be a problem, as you guys know, I have some views that are controversial on companies like Upstart, which I'm not in right now because the momentum is there. Plus, I think you have short covering in general across the marketplace. But the thing with subprime auto is that they've really gotten lucky that the jobs numbers are okay. If the jobs numbers start to sink, they may not ever, then that would be an issue. But the bigger issue for a lot of the subprime auto lenders is size of book. Because after a certain size of book, other regulators get involved and get a little bit concerned. Now, there are some companies that did this very smartly. Like there is a company, CACC is the ticker. I keep forgetting what that company's called because I have to do more work on it. I think the ticker is CACC. If it's not, I apologize. It's some combination of those four letters. But they do subprime auto lending, but they typically buy it on the secondary market. And also, it looks like from what I read that they actually slowed it down when rates were so low, and they thought that used car pricing should not have increased at all. And so they were like, you know what, let's take a half a beat because these loans are probably crapola. So that is what it is. Plus they've been around since the 70s and managed to shore up their financing a different way. So subprime auto, the biggest issue you have with any lender of subprime auto right this minute is the size of book and the marks associated with it, because from an accounting perspective, you can't fail to take those marks forever, so to speak. And it's going to be really relevant for how much capital you then have. So your revenues can go to zero if that book gets too large. In other words, you won't be allowed to originate anything further. You won't be allowed to buy any more loans. You'll just have to sit and carry that. And then basically you become, you might as well just change the structure of your firm and become a SPAC, a full-on SPAC, similar to what happened in the mortgage crisis, because you don't have access to financing anymore. Let's see. So that's that. Hopefully that made sense. If it didn't, I apologize. Just keep asking. What else we got? Am I drinking mimosas during the stream? I'm just going to say, I would love to be drinking mimosas during the stream. I just have, thank you. I would love to be drinking during these streams, to be fair, but I'm a little bit nervous to do that on streaming. But I would love that otherwise. Thank you. That is CACC. That's it. Credit Acceptance Corp is the company. I still have to do more work on this, but it looked interesting to me when I first looked at it. I want to see what I really want to look at if somebody's already doing the work on this, and you guys can kind of use this as a starting place, is exactly how many loans they did last year, which would have been the year you didn't want to do the loans. And also what's their source of financing, and what kind of rates are they cool with. They also have a couple, when I look through when I look through the risks portion, they do have a couple of states, because they're right on top of usury laws. I mean, look, with subprime auto gets crazy, you can charge a person 30% on their auto loan. And they're right on top of it in some states. So as a result, the state regulators have come in. So there's all these little things that you have to look at. But since this particular company's been in business for many decades, they actually have a slightly better shot at doing it correctly. Oh no, I hope I got something. Yes, Sean, you're 100% right. They're going to continue to lose money for a while. And even a bigger situation for them that causes them grief is they don't have any lithium. They haven't figured out how to shore up their supply lines. And unlike Tesla, they don't have the capital to do that right this minute, for a lot of different reasons that we already talked about. So yeah, I totally agree. Are you seeing anything on your side, David? Am I missing any of these?
You mean questions wise? No,
Yeah,
I wanted to
questions.
ask you. I see the only, maybe is Tesla as far as a capacity. I mean, because they're going to have
Totally.
to produce a bunch of cars, right?
Yeah,
So
I mean, it is. Yeah,
they're opening one in Indonesia. Trying.
yeah. They are. And if you think about where that sits relative to Australia, it kind of makes sense because, I mean, again, that's where that lithium map becomes very interesting and important. I wouldn't be surprised the problem is your population. You got to kind of think I got to get the lithium. I got to be close to where I can actually then ship this easily to the population that needs it. There's all these, I can't even imagine what it must be like to be an executive at Tesla trying to manage supply chain. But I do know that they managed to do it last year where no one else seemed to be able to manage to do it. Yeah, gigafactories in Berlin, Austin, Shanghai, Fremont. This is true. This is where they're at. And yeah, that's exactly, I totally agree with you, Hadouken. And that's why I say that that gross margin number, which is wildly larger than Ford and GM, does not even take in economies of scale, because they're not producing all the way as they could. Most of their capex has still been going into this other stuff. So yeah, I totally agree. And yeah, you're right. If we then look at Shanghai and kind of look at that, that is kind of the model of what Berlin and Austin can do. Now, you do have to realize that their cost on the battery side is a little bit better out of Shanghai, but that kind of is what it is. It just has to do with China's a, China makes batteries. The way to say it, you know what I mean? It is what it is. So those things are all absolutely true. Yeah. So that's why, I mean,
I
hopefully
heard
this video,
there was a
David, I lost you. What were you going to say? David,
I heard
you
there
there?
was a Chinese balloon flying over Montana. Yeah, I heard there was a Chinese balloon flying over Montana.
Why? Are they just looking at
Kind
lithium, or what?
of, I don't
You can't. I'm
know.
so
Yeah, it's
naive to jokes, and so you get me every time. It's hysterical. I'll be like, oh my gosh, what's that all about? That's so funny. Yeah. Any other questions?
no, really. They found one. The Chinese balloon got lost. I guess all of a sudden they're over Montana.
Like a hot air balloon?
Yeah, I'm trying to be funny. It's I don't know some kind of research balloon.
I think they're probably making fun of me as far as that goes. So like, it's okay. I'm just so naive sometimes. It's so funny. All right. If there's no other questions, happy Friday, everybody. Good luck with your portfolios. Take care. Bye.